Here we are with the Momentum Traders Insights, and we've got Charles Boyd from Foreshore Capital to help us out while Gary's his way. And he's going to share with us issues that were coming from sort of a novice trader into an experienced and professional trader into then running a fund that is for momentum traders. No matter who we are as momentum traders, we're somewhere along that journey. And we've always got these self-doubts, questions, queries, whether it's our trading or our philosophy. And this is something that Charles has wrangled with and put together a nice educational piece for us to understand. So good morning, Charles. How are you?
Pretty well, Christopher. Yourself?
I'm well. A cracking Sunday that we had Father's Day up here in Sydney. Beautiful weather. The sun's now shining outside. But we're talking about momentum trading, and this is something that you and I talked about since our last recording on Friday. You sort of asked, well, what are the members? What are their pain points? What is it that they're struggling with? What is it that we can sort of help them with? Obviously, from a disclaimer side of things, read that. It's not personal advice. This is not their personal circumstances, but momentum traders across the globe. We're getting comments and requests from across the globe about momentum trading, and you and I discussed some of them. So if you put yourself in their shoes, is this something that you've experienced across your career?
Absolutely. I think there's a couple of ways that I sort of look at individual questions. Like there's a few that you mentioned earlier was, people not having confidence in execution, not knowing when to take profits, finding the best opportunities. Like there's a series of things. However, there's also a point where every bit of, every pain has a gift. And there was a moment, this is a few years ago now, where I was a broker. I wanted to get better results, and I thought, okay, how do I get better results? And I went down the rabbit hole of researching the best traders that I could come across. And I came across Richard Dennis and the Turtle Traders, and there's a fair bit of literature about them. And I thought, right, I'm going to, with this new knowledge, I thought I'm going to have a crack here, and I'm going to follow their strategy. And the strategy is basically where you buy a breakout, and then if it goes up, you buy more, and you buy more until it runs, until it stops you out at a certain point. And so I identified two stocks. One was a previous leader. Well, I didn't know that at the time, but it was a previous leader, a large resource company, and the other company was a small up and coming company, which I thought, well, I will choose the resource company because it's a larger company. There's probably more, there'll be less risk. That's what I was thinking. And I purchased my first hit, and then it went up again. I purchased again. I got 3 bites of the cherry. Within a week and a half, I got stopped out. Tore up 10 grand. It was, 10 grand's 10 grand. And I looked at the other company, and I stuck to the script, and I didn't buy this one though. And I thought, what would happen if I had purchased and I marked it out, and within 3 months I would have made $1 million. And I was like, wow, okay, here's a company that I thought was, the leading one, and I chose it, and it cost me 10 grand. And this other company that I didn't know, much about could have made $1 million in 3 months. And that made me really go down the rabbit hole, because I thought a lot of traders can think, it happened to me. As soon as I got stopped out, and then a couple of months looking back and going, that was a huge missed opportunity. It was like, okay, why did this happen for me? And then I went down the rabbit hole of basically finding the nuances of, why you should be choosing one stock over another. The fundamentals, the cash position, the growth, the opportunity, just everything. And this is where it's sort of looking at individual things in the market, in terms of, I'm struggling, for example, on execution. Where's the gift in that? What nuances do you need to get better at? So this is the framework that I sort of thought about looking back on that time.
So with your career, you've been through that. As you're saying, every pain point has a gift. It's kind of like what we say to children: look, failure is okay. It teaches you where to focus on getting better. So since those first trades of fork in the road, do I go with the more developed resource company where it's less risk, or do I go with the unknown? since that day, you've obviously learnt a lot. So what's the framework that you now use looking at the markets to find your pain and turn it into a gift?
I sort of look at in so I, straight away if I lose money and I've as a trader you're always going to lose at some point. I think, okay, what do I need to get better at? And it's not oh, like I was thinking about it last night. So many people, and I've heard this time and time again when I was a broker, and also there's brokers that I speak to, and they say similar things like, uh, "It'll go up after I sell it."
The
Um,
self-doubt's coming in.
it's-
Yeah.
the negative thought process. So that's or sort of I don't know what to do. It's a lack of self confidence. I was going to buy it, but I didn't. Well, that's a lack of self confidence and comes into fear. So yeah, it's how do you turn that negative talk into self belief and confidence to basically to trade without fear and knowing what and defining your own strategy.
But as no doubt every trader has been through that. And it's one thing to sort of go from paper trading to then cash trading. And even if paper trading's been successful, we know that many traders that have said, okay, I've got this system honed. As soon as you start putting money on the table, the emotions go through the roof. And then we're in that fear spiral, that negative spiral. So, okay, I know you've shared it with us. So you've got something to walk us through how to sort of turn those pain points to lessons. So what's the first step?
Well, it's really identifying what fear is and then flowing through it. What I might do, I'll see if I can share my screen.
Yeah, so if you're watching this, no doubt you're momentum trading and you're at somewhere along the cycle, comment below. Let us know where you're up to in that cycle and what the current pain point is, because we assure you you're not alone. I know Charles and I have definitely been through it. Gary and I have had numerous conversations on and off air about the hurdles, the struggles, what's holding us back, deer in the headlights, inability to execute and pull the trigger, self-doubt, and as you've got here, Charles, fear. So we're going back to basics here, but we need to, because this is where the hesitation and the performance comes from. And we know from S&B Capital, Dr. Steinberg, they go back and they look at the real fundamentals of it to understand what's the root cause holding us back. Let's address that, and then we can solve. So we're going back to the root cause here. Fear, what is it?
So this is straight out of Google. An unpleasant emotion caused by a threat, danger, pain, or harm. To be afraid of, or likely to be dangerous, painful, or harmful. Like we've all experienced that. So, what's fear in trading, and what does it mean to me? Like fear, and when I hear people talking about fear, I just think they in trading they don't have a level of confidence that they're comfortable with. It comes down to no confidence, and that's by default not having a defined strategy. And if you don't have a defined strategy, then a series of, a lack of self belief sets in, and it creates this sort of fear trap. And people will, the self doubt continues, and their results are mixed. And then all of a sudden they give up all too hard. And they go, they bad mouth the market or whatever, they can't do it. So I look at it in terms of how do you break out of the fear gap or the fear trap, and it's through knowledge. Like it didn't happen to you, happened for you, and that for you is to basically knowing more, finding out more knowledge. And that turns into inspiration, like reading about the best traders of, a Paul Tudor Jones, the turtle traders. We could name, heaps of them, but it's that inspiration of knowing how they've had the strategy and then working out what is the defined strategy which works for you. And I think defined strategy really comes down to a personality. Like we could run through my strategy, very easily, but that may not be the same strategy that, like, everyone's personality is different and everyone has a different nuance on the market. So my strategy might not be right for other people. So it's about defining your own. That turns into action, record your results, and that builds into confidence. And then you can work out, okay, I had a winning trade, do another trade, losing trade, record the results. What went wrong? And okay, I need to get better in a certain aspect. And this builds out of, breaking out of fear to then, the fear trap, sorry, and then breaking out of fear. But that doesn't get you to the point where, you're trading without fear. So to trade without fear, is my take on it anyway. There's another layer, and this comes in from, knowledge to wisdom. And I look at wisdom from, like, I watch a bit of golf videos, and one thing that I absolutely love watching is Tiger Woods, and when he's in a tutorial about golf, he obviously has a certain amount of knowledge, but the wisdom that he can impart on the nuances of talking about golf and aspects of the swing it's absolutely phenomenal. It's next level. So that knowledge turns into wisdom, and that turns into empowerment through the inspiration, and then that turns into an activity from not just one action, but multiple actions turn into the activity. And that turns into certainty in terms of, what, like, for example, the aspect of golf, Tiger probably knows within a 10 to 20 meter area as to where the ball is going to land off the tee. Where if a novice golfer, he's probably at the first tee, he's
going in the drink.
he's just praying that it lands, somewhere on the fairway. So it's that level of certainty that comes from time, knowledge, and then multiple actions, activity. And then that gets you trading without fear. And it's really trying to work out at what aspect of the trading journey as to, what part of knowledge does the individual trader need to, get to this circle of, trading without fear. So that's the sort of framework that I think about it, because we could run through, how do people get confidence in execution, or, finding the best opportunities. And I'm more than happy to go through that. But it really comes down to, when I talk to traders, it's the lack of defined strategy that I think that most people, like, I know exactly what I'm looking for. And like, I just the last couple of days, 40X has been a fantastic trading stock. Like, it's had an incredible run. I've missed it, but I'm actually not that upset about it, because if the stock's it's around $2 at the moment, if it is going to go to $10, there's going to be multiple buy points, and I know I'm going to be there to capture it. So I don't have fear of FOMO of the stock's gone from $1 to $2, and I'm tearing myself up emotionally. I'm like, yeah, okay. If it is going to go to $10, there'll be multiple buy points, and I'm like, I know through the strategy that I run that there's a pretty good chance that I'll be able to capture them. So that's the way I look at the individual traders. How to overcome fear in trading.
That's a great structure. I love it. It's so well thought out, and I can look back in my career and identify pretty much every single one of those steps. Yeah, definitely every one of those steps, and so I've been parallel into 40X. If I go right back into the fear circle, when I used to see trades like 40X, I would berate myself. I've missed it. How did I miss the best trade of the day, the best trade of the week, probably the best trade of the month? I should be scanning these things. Why did I not find it? Why did I not find the breakout? I'd go back and analyze it, try to find the breakout. And it was only through getting out of that fear circle, jumping into knowledge, which sounds like the same way you did it. I went and read book after book after book. It's just endless books about the best traders from over 100 years ago. And it was only after reading a lot of years to then realize I don't need fear. I don't have the fear of missing out. I know my edge, which you get to the defined strategy. And that's where I play. And 40X is not my edge. It might be. It might eventually be. So we've been through very similar paths. I know from our conversations, we trade very similarly. But we're trading the same stock at the moment, but we've come at it from different angles. I know we'll have different targets, we'll have different stops. So I guess taking this application now, can you share some insights of this whole structure? Obviously, it's how you run your fund now. What about trading today? How does that work? And I think you've mentioned 40X. So obviously, as traders and anyone who's watching, you're going to have a short list of those top stocks. And well, looking at that short list that we've got here from Charles, we're going to run through them right now because how do you look at these stocks, trading opportunity, but also with that fear concept? When I used to get a knot in my stomach when I'd see these and I'd berate myself for not trading them if I missed them. So is that something you've experienced? So you rid of it from a long time ago? What's that like?
Well, it's absolutely. Like it's, I think every trade has been through a certain level of fear and pain. That's that's without a doubt. But it comes down to what for me was working out, really defining my strategy and studying the past winners. And you'll hear many of the top traders, they'll say, go study the past winners. And this isn't just from the charts point of view, but this is all from a fundamental point of view. Like if you read Warren Buffett's letters, there's certain patterns in there that pop up time and time again. And that's the same as the charts. So it's obviously different patterns, but it's a similar framework. So one thing that this is just an interesting exercise that I went through the last couple of years is that, these stocks here are, I just pulled them from TradingView, the best performing stocks above, I think it was 200 or 300 mil market cap over the last 12 months. And this heavy horizontal line is the stock, is where the stock was up 100%, before it made the move. So 100% from the bottom. And a lot of traders will say, if it's up 100%, oh, I can't trade it. It's run too hard. I'm not going to, I've missed it. But I've just gone through it just to show as an exercise that it's actually one of the requirements that I now look for is, are stocks up 100% or not over a certain period of time? Because if they're not, I typically don't want to trade them. There are nuances of that because, there's ways that you can actually, so sometimes there are opportunities when the stock isn't up 100%, but for my strategy, I like to see them up 100%. Like this is EOS. Where are we? It's from the bottom. It rallied 96% or called 100% within 20 days. I haven't marked it from the complete bottom here, but that's a really quick rally. Sets up and then pushes from this moment. I can't. Where are we? 200 odd percent. So, I'm quite happy to see 100% rally before getting involved. And a lot of people will beat themselves up and say, "Oh, it's up 100%. I can't buy it now." Well, that's exactly where I'm looking at it. So, looking at 40X from the bottom, 100%,
Yeah.
tags the 20 MA and then pushes off. That's not an attractive bar at the moment, but this may actually reset up and go again. ELS again, drone shield, which was, fantastic trade this year, up 100%. And this is one of the, we won't go through it, but that was where I was lucky enough to catch drone shield. MTM. Now they did have a backdoor listing, but this is from the 100% from the opening price of the recapitalization and took off. Like so I don't. Some people may look at it as a fear, buying stocks when they're up so much, but I actually look at it as a precursor. And here's a couple of stocks that I've actually just traded recently. IPX. I don't think it's actually up 100% from the bottom. But hang on, what's happening here?
Well, 208. So yeah, we need 416 over there.
Yeah, sorry, yeah. And I was lucky enough to catch a bit of this move. Mineral Resources, it's had a pretty nice move. It's one that I've been trading recently. PLS, and PLS is an interesting one, and I know all traders. Well, I can't speak for all traders, but a lot of traders struggle with getting stopped out. I actually had to go at PLS here. Got stopped out on this day because it looked horrible trading below the 10 MA. And if I'm in a stock over the first 3-4 days and it's basically red, I don't like hanging on to it. But I actually repurchased it here because the stocks ran up, retested, set up again, and pushed.
So you bought it higher 3 or 4 days later.
Yeah.
which
Yep.
sounds insane to a new or a novice trader. They go, "Oh, you just completely made the biggest mistake."
Yep.
But it's after experience, you've got comfortable going, this is actually a better trade.
Absolutely. And the reason why I do that is because what happens if I missed out on this type of move? So that's, drone shield, it could have stopped me out and then reset and gone again. And we had one of the best trades in the fund on drone shield through this move. So I'm not, if it stops me out, it means my entry price isn't right. If my entry's not right, I got it wrong. Like, simple, move on.
There's a great
Um,
expression, and you might remember which book it's from, or which trader, but it's the market's never wrong. It's
yep.
we're wrong. We can be wrong. Our entry can be wrong. Our timing can be wrong. Our entry could be right, but at the wrong time. And the market's not wrong. So we just need to understand that. And is that something that sort of through wisdom and study and researching your own trades that you've been able to get comfortable with real
Absolutely.
true?
And like, the market doesn't care if I've bought the stock or not. Like, so if I speak to some people and they're like, oh, I bought here, but this, like, the market doesn't care. No one cares. The market is, I forget who said it, but it's really like a mirror. Like, if you've got negative self talk, your trades will by default be a bit shitty. You know. So I, and this is the whole thing about belief system and changing beliefs. It's it can take a bit of a process, but it's yeah. Negative talk doesn't help anyone in the market.
No,
So
it is. Oh, we've seen it many times with. I'm not sure if you read Dr. Steinberg's books or Trading in Zone, Mark Douglas, and with Steinberg's got a lot of interviews with Lance Brightstein, who's a phenomenal trader. Different time frame to what you and I are trading, but amazing and a lot of lessons there. And they've got a lot of data, so the two of them can work on it. But that self-talk, if anyone hasn't watched it, the TV series that was on Billions and Wendy, it's the same thing. It's just you've got to get back, and that's that mirror that you're talking about. If you've got that self-doubt and those issues and the fear in yourself, it'll show up in your trading results, won't it?
absolutely, absolutely, yeah, yeah. So it's yeah. I can't speak enough about negative talk and how it can derail your your trades. And there's also another framework that I think about in sort of the crazy eight, or the crazy trading eight, where this negative self talk it will go back and forth, back and forth. So yeah, it's
So,
I guess to sum up, I can. There's always an aspect of fear in trading, and it's about overcoming that. But having a defined strategy and know exactly what you're looking at and how you want it to perform, it eliminates that. So, this is another stock I've been trading recently, DAI. It's up 100%. This is where I like the looks at it. It's I'm not trying to pick the bottom. If there's people that can pick the bottom, then they're better than me. That's I, I've tried, I failed, I can't do it. Like that's not me.
not
So
your skill set, yeah.
yeah, yep.
Well, I like what when you're looking at picking the bottom there, it's his lesson from Minervini, which was he likes to be in the market the least amount of time possible. And there was one trade where Gary did pick the bottom within 2 or 3 cents, and this is a very expensive stock, so 2 or 3 cents was was a tight range. But the downside was it ended up being a trade for 4 or 5 months before it ended up going anywhere. And that locked up capital. For you, it's in the fund. For him, it's in the portfolios. For us as individual traders, it's capital in our own portfolios. And the opportunity of cost of that is massive, particularly if you're able to cycle it time and time again and get a 10, 15, 20% rotation. So picking the bottom, I actually said, even if I could pick the bottom, I think that would actually kind of could hinder my performance because the opportunity cost would be too big.
Spot on.
Uh,
Like, what happens if you bought here? Let's
True.
just look at it from, you could be waiting
Months.
basically 3 months before like, you're up 30%, but or you could be 2 months in and you haven't made any money.
Yeah.
opposed
You've
to
locked up capital. You're consistently allocating your time to managing the trade, managing stops. For you, it's talking to clients about the position that you've got that's sort of dead in the water. It's I imagine that you're looking at this going, I need to focus on the best trades and the ones where I have edge. So that's probably, you've been through this spiral. You've now come out to the trading comfortably. You focus your attention on and where you point your attention.
sorry, Christopher, that sort of
The internet
jolted
dropped
a bit
out.
earlier.
Yeah, no, it does that. No, so now that you've been through that whole cycle, that whole spiral, where do you focus your attention for trading? Where do you point your focus trading?
So I subscribe to the Minervini style, and I'm also trying to be in the market the least amount of time. And I'll just run through DroneShield, for example. Like it was an amazing rally, and we were lucky enough to actually get our last shares out at $3.90 here. And just as an example, mind you, we sold, repurchased in, held, and we started selling basically on these 3 days. And the reason why I want to talk about this is that I could have held on to this position, and had I held on, I would have had to sit through a 25% pullback to then potentially get another 10% out of the trade, but then I'd still be down 22% if I'm holding it. And when you're holding a reasonable or any position and it goes down 20%, the emotional draw on that and the emotional it can be painful. So I want to be looking at a Paul Tudor Jones talks about a 1 to 5. You risk $1 to make 5. And in this example, had I not sold out here at like the last shares, mind you, that I didn't sell the bulk of them out here. The bulk were lower, but the last shares, I would have had to give up $2, for example, to make an extra $1. To hold through a 20 plus pullback for an extra 10%. Like that's risking $2 to get one. That's it's not a 1 to 5, where in this scenario where the really purchasing it, risking to the bottom a 10% to then having a fantastic rally. So it's that risk reward, and there's certain aspects, like there's aspects that every trader has struggles with. Like some of the struggles that I have at the moment is trying to get size in liquid names. Like we talked about it last week. And that's why I typically don't try and trade stocks that are less than 100 mil market cap and or less than 50 cents. There's always aspects
Too thin.
Yeah, it's too hard, too thin. But that's also an advantage for people that that have got a
Nimble.
Yeah, if more nimble, you can get in and out quicker. So is it a problem or an opportunity? That's the other aspect. But yeah.
Well, I can definitely say I've traded last week. I was sat on the bid for 4 hours, top bid, and didn't get hit. So that's nothing traded. It was over the 100 mil market cap. It was over 50 cents a share. And I've looked at that and gone, well, if I can't get into it, then how on earth am I going to get out when things go bad? So it's sort of, that's an opportunity for someone else who can ride that through. But I know that emotionally it's going to take too much of a tax on me. So this has been really insightful. I love that fear spiral to then trading with confidence and trading without fear, and going from novice trader, broker, and then running your own fund. And say thank you very much, Charles Boyd from Foreshore Capital.
All right. Thanks, Krista. Cheers.
If anyone wants more education, we'll put a whole playlist of trader education. We'll put the last video from Charles in there as well if you want to catch up on those. And we'll see you again on Friday.